Okay.
Have you done cash flow before?
No,
Yeah,
doctor.
sure, doctor.
Huh?
I didn't do
Yeah,
actually.
Yes, Sumaya. Have you done cash flow before? No.
Doctor, it's chapter 15 or 16?
16. I have just skipped chapter 15. Okay, we will take that when it is required. Okay, don't worry about that.
Okay.
Okay, don't worry
No, no,
about that.
just I need to take out the papers, that's why.
You need to take out the.
I have it, I print it out. I need to take it out from my bag.
Okay, should I wait?
Yeah. No, no, it's all right. Go ahead.
Fine. See, very simple. Okay, very simple. You have income statement. You have statement of financial position. In the income statement, you have all the, you will have income, you will have expenses. You have something related to cash, something related to non-cash. Okay, cash and non-cash. Non-cash, one of the example is depreciation. Non-cash is nothing but loss on sale. Is it right? Loss by fire. Is it right? No, loss by fire, not by loss. Okay. Next, you will have something with respect to these are the things. Is it cash expenses and non-cash expenses? In financial position, divide the state balance sheet under four different segments. Okay, very simple, very easy. Okay, you are talking in terms of share capital, you are talking in terms of share capital and non current liabilities. The second part, you are talking about non current assets. Third one, you are talking in terms of current liability. And the fourth one, you are talking in terms of current assets. Fine. Now, when we do the things, cash flow statement, I am giving a summary of first 7 pages to you. Okay, summary of 7 pages to. When you are doing a cash flow statement, we are preparing the cash flow statement as per IAS 7. When we are preparing ISA, cash flow, only cash that matters, nothing more, nothing less. If it is cash, you have to show. If it is not a cash, you have to just make an adjustments. Now, when we do the things, cash flow statement is divided under, see, we have following way, we are following as per IAS 7. Okay, we have direct method and we have indirect method. We will use indirect method only. Understand? We use indirect method only. Direct method is simply a cash account. Okay, we are not talking about the direct. We are using the indirect method only. Now, when you are doing indirect method, cash flow statements has been divided under three categories. The first one is operating, the second one is investing, the third one is financing. Is it right? The first one is operating, the second one is investing, the third one is financing.
Financing.
Operating activities is these two are operating activities. What are the activities? Operating activities. Operating activities is related to what? Current assets and current liabilities. Little bit on current assets and current activities and related to what? Related to income statement. Income statement also we will not take from the beginning. We will take it from what? We will take it from the profit, operating profit. We'll start with what? We'll start with operating profit. Subsequently, we will do simple thing, format, only mathematical concept is there. Next, if you take investing activities with the non-current assets. Financing activities, the moment they say by name itself, financing activities is related with share capital and non-current liabilities. Separately you have to show. Is it right? Here we are going to show something related to income statement plus whatever is related to current assets and whatever related to current liabilities. Investing activities, we will say very clearly non-current assets. Financing activities, we are talking in terms of share capital and we are taking into consideration the non-current liabilities. Now, I will ask you simple questions. Is it any asset, whether it is a current asset or non-current asset? I will say rule number 1. If asset is increasing, what happens to cash? Assume asset is 2022 and 2023. Asset, any asset, current assets or non-current assets. Asset is 950 and the next year the asset is increasing to, except cash. When I say asset, excluding cash. When asset is increasing from 950 to assume 1350, how much is the difference? The difference is going to be how much? 400. When the asset increases, what happens to cash? Tell me.
Decreasing.
Asset, is it right? When you are increase, you are purchasing a car. Okay, car will increase, but what will happen? Cash will decrease. When asset decreases, is it right? When asset is decreasing, the asset is 1750. You have an asset. You have sold the asset 1600. When the asset decreases by 150, what will happen? Cash will
increase.
This is, I will put rule number 1, rule number 2. I will ask these rules every time. Same thing happens with respect to share capital, with respect to non-current liabilities, with respect to current liabilities. This is rule number 3. When the liability increases 1600, 1920, liability is increasing by 320. What is the liability? Loan. What is the liability? Payables. You are not paid, your liability increases. You have taken the loan, your liability increases. When liability increases, what happens to cash? Cash will
increase.
Cash will
increase.
Rule number 4. When liability decreases, you have paid, okay, you have paid payables, you have loan paid. Is that any liability? Is it right? You have a liability of 1700. The liability decreases to 1350. Is that the liability? What is the difference? Difference is 200, 1350, 152. How much? 350. What will happen to cash?
Decrease.
Cash will decrease. Understand, remember these rules. Rule 1, Rule 2, Rule 3, Rule 4. This is the complete, I can say this is the 90% of this chapter. We have to know whether what happens to cash in the end. If cash increased, add. If cash decreased, less. We should know how each account we have to work it out. Fine, that much only. They are talking about IS 7. We are making a comparison for two years in terms of profit and loss account. Is it right? We will make a interpretations. We will do the direct method and indirect method. Now, coming back to this, listen carefully. Which one is good, which one is not better? You have to write comments on that. Selected ones, 4 or 5 sentences. Okay, 4 or 5 sentences. Very precise. It should not be general. Operating activities. Is it right? Operating activities means operating activities, either you will get plus or you will get minus. You will have inflow or you will have an outflow. Which one is good for us, inflow or outflow? In operating activity.
Inflow.
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 Inflow. Outflow means expenses are more. Is it? Outflow is expenses are more. Okay. Now, non-current activities, non-current assets. Again, in non-current assets, which one is better, inflow or outflow?
In inflow.
Hussein, Sumaya.
Receivable. Bank.
Huh?
Confused now.
You are doing business. Keep it in mind. You are doing business. When you do the business, definitely you want good revenue. Is it right? Your revenue should increase, operating activities. Once you have good revenue, think very interesting. Once you have good revenue, you think of expansion of your business. When you think about expansion of the business, what will happen? It is a good sign. Whatever the revenues you are going to get, is it? Whatever the revenues you will get, you are using very positively. You are expanding the business. When you expand the business, means you are investing in assets. When you are investing the assets, what is important? It is not an inflow, it is a outflow.
Outflow.
Are you clear about this?
Yes.
Very simple. Is that you are doing the business, you want good revenue, operating activities. Then when you get good revenue, you will expand 1, 2, 3, 4. Is a good sign. Now, financing activities, share capital, non-current liability. When she always think you are doing good business, is it right? When the business is good, is it right? When the business is really good, it is growing. Is it? It is growing. What happens? People will come forward to give loans also. Is it? You have come forward to give loans also. Not only loans, is it right? You will have inflow and you will have an outflow also. You will pay also. There will be inflow, there will be an outflow. Means you are not only people are giving you loans, but you are also paying on time. Is it right? Paying on time. When you are on paying on time, the difference should not be big enough. Okay, that difference should be good enough. Neither you should have more inflow, nor you should have a more outflow. If you are having more inflow, means what is happening? You are borrowing more. Is it? You are borrowing more. Borrowing more is also not taken very positively.
Yeah.
Next, you are paying more. Why you are paying more? You have to pay on time. You have to pay on terms and conditions. Neither you should pay more nor you should pay less. Means whenever you are talking about an financing activity has to be a more balanced inflow or outflow. This we will come to a conclusion. We will understand now, but we will make an interpretation at the time of doing the question. Is it? At the time of doing the question. Is it? Now what happens? We have to simply see this. What is the results? What is the calculation? And what is this? Every step will have marks. Every step. So in the end, we will have, as we are doing in the statement of finance balance sheet, that it will be tallied. Here also it will get tallied. Is that? Now, are you clear about this?
Yes.
They have mentioned the first sentence. In FR, students will not be asked to produce a complete statement of cash flow. They will not ask. We will do, but they will not ask. Is that? We will do the things completely, but in the examination they will not. When instead they will test, when cash flows are tested in exam, they will be required to produce a cash flow extract. Only either they will give you an operating activities or they will give you a financing activities and investing activities. This is my experience. Okay, this is what we have done in the question papers. Fine, that's all. Nothing is there in this chapter. We will do whatever is there. It is not fine. We are okay. That is the thing. What is the objective of statement of cash flow? They are talking about what is the changes in cash balances. Is it? What is the changes in cash balances? We will have inflows and outflows during the period. Fine. They are talking about usefulness in terms of operating, investing, and financing. Now I gave you a complete summary of that. Okay, but read. Okay, please read. Don't skip it. Is that? Don't skip it. Okay. They are talking about one of the reasons why what's happening is the final profits are relatively easy to manipulate. We can see if when you study auditing now, there will be a fraud, there will be error. Okay, it is a part of the system. You cannot say that complete system is perfect and intact. Okay, there will be a manipulation, fraud will be, inventory depreciation, allowances are there. Just you fix on that how it is going to be happen. Now, when you do the things, what are the cash? Is that cash is nothing but short-term, highly liquid, readily convertible into cash. Is it? That is an insignificant risk of, there is no change in the risk in value. Fine. Now, they have given you the two things. See the things. Keep it in mind. This is exclusively, is that? This is exclusively for the operations. If I am doing it, they will give you a one question, they will focus on operating activities. Format is important. First you start with profit before tax. Okay, you have finance cost, add. If it is not in brackets, it is to be added. If it is in brackets, it is minus. Income, investment income, it is non-operating. Is it? It is non-operating. That is why it is an investment income. You have to deduct. Always depreciation should be added. Always. Because it is a it is a non-cash expense. Is it? Any profit or loss on sale, it is non-operating. Is it? It is non-operating. Provisions, either increase or decrease, IS 37. Okay. Government grant, amortization. We go back to the government grants what we have studied. Amortization, decrease in value if you have paid. Is it right? Minus. Any increase or decrease in premium, increase minus, decrease add. Okay, accruals minus or plus. Okay. Now, here what will come? Here we will come basically current assets and current liabilities. Increase or decrease in inventory. Is it? Now I will put the things. Inventory. Is it? Inventory. I am giving a specific 2022, 2023. Is that inventory is 150? It has been increased to 175. Asset increases. Asset increases. What happens? Cash will decrease. When it has been increased, it means that when it has been increased, it means that we have made a purchases. Asset has been decreased 120. It has been decreased to 90. Is it? Inventory has been decreased. Inventory decreases. We have used the inventory. Is it right? We use the inventory for cash purpose, for sale purpose. Is it right? If asset decreases, what will happen? Your cash will increase. This is the same procedure. Okay? This is the same procedure. That's what we are talking. This will be there. Okay? Now, we will cover this. Next, coming back to the things, see what they say in short, depreciation is not a cash flow. It has to be added back 100%. Capital expenditure should be recorded in investing activities. Profit or loss on sale of asset. Is that you have non-current assets. Is that if there is a inflow from sale, it will be investing activities. Any loss on disposals, operating activities. Is that likewise you have change in receivables, change in inventory and change in payables. Is that it is otherwise called as a working capital. I will not say, now I will say current, the same rule applies. If current assets is increasing, cash will decrease. If current asset decreases, cash will increase. Here we are talking about an asset, whether it is a current asset or whether it is a non-current asset. Rule applies same. Current liability increases, cash will increase. Current liability is decreasing, cash will decrease. Okay? The same thing they are talking about. Change in payables, change in inventory. Okay? Next. They are talking about the things. This is what we have done. Now they are talking about the investing activities. Investing activities, in simple case, non-current assets. Any purchases, minus cash outflow. Is it right? If it is minus, it is a cash outflow. Is that proceed? You have sold anything, you have got any grants, you received any interest, you have received any dividends. Is it right? It is a cash inflow. Okay? Cash inflow. We will get the second part is we get the investing activities. The third one is what? Financing. Financing, if you have sold any shares, if you have got any loans, you have to add. If you have paid lease liabilities, now you understand lease liabilities. If you have started now about the lease liability, you will, without going to lease chapter, you will not understand anything. It is any lease liabilities we have paid, it should be deducted. Any dividends, it has to be. In the end, you will have the increase or decrease in cash. You get plus, you get minus. Don't worry about that you are getting minus. Is there nothing to get panic? Is it? They will give you the balance, closing balance they will give the opening balance. We have to get it tallied. Now, in between, I am telling you this is the way marks will be scored in calculation papers. In calculation paper, that is the reason calculation papers are easy to pass. Don't worry that something has went wrong and I will lose marks. No, it is for every step they will have marks. Assume for this step they will have 1 mark, this step they will have half mark, this step they will have 2 marks, like that. Is that this? Likewise, this applies for your question 1, this applies for section A, section C, question 1, section C, question 2 also. Nothing is there, okay? This is where we are going to calculate the cash flow statements. Are you clear about this?
Yeah.
Now, there are 2 ways are there, okay? You can put it in a column format, is it? There are 2 methods are there, or you can put in T account. Is that you can put it in column format, you can put it in T account. We will do, okay, most of the time you will do in T account. Is that most of the time we will do in T account as such. Fine. They are saying, they are talking about interest, dividends, income tax. Okay, see the thing. Property. They will. You are open. This is the opening balance. This is the closing balance. Is it right? This is the closing balance. We will post it accordingly, and whatever is happening.
Doctor,
Yes.
can you rejoin Mazen?
Pardon?
Can you rejoin Mazen?
Yes, Mazen.
Yeah, doctor. Sorry for that. I don't know what happened.
No problem. Say thanks to
Yeah, it's
Hussein.
okay.
Alhamdulillah.
Yeah, Hussein, thank you, Anuj. Yeah.
Okay, and see the thing,
Because it
whenever you
only-
say, whenever you will have a T account, is it right? If it is an asset, if it is an asset, if it is debit, you have purchased. If it is a credit, you have sold. Okay, if it is a credit, see, asset increases. Now you have to be clear in rules. If asset is increasing, it is debit. If asset is decreasing, it is credit. If asset increases, it means it is purchased. If asset is on the credit side, it means it has been sold. Rules are rules. Rules will never change. Understand? See, my way of putting things is very clear. I will say once rule is rule, it will never change at all forever. Okay? In the same way, if it is a liability or share capital, if liability is increasing, it will be on credit side. Is that it means what you have borrowed it. Is it right? You have borrowed it. I will pay. It is a cash outflow. I will say this is the cash inflow. If liability increases, credit side means you have borrowed. What happens? It is a cash inflow. If liabilities and share capital, okay, if liability is decreasing, it will be on the debit, means you have paid. It is a cash outflow. Whenever you are doing, just see, I will put in purple color. It will be easy for you to understand that why we have done this. Is that why? This is the simplest way. Okay, don't get. This is the simplest way of scoring the marks. Okay, simplest way of scoring the marks as such. Fine. We are talking about financing. The same thing. They are putting the accounts. See that if it is paid, it will be debit balance. Debit all expenses and losses. Is it debit all expenses and losses? If it is difference is on the debit side, means it has been paid. Okay, it has been paid. Fine. They have given this as a example. Okay, they have given this as an example. In the example, they have mentioned so many things. Apart from that, they have mentioned, see the thing, this they have done in 2 ways. Is it? They have done in 2 ways. It is in the column format they have done, and they have done in a T format. Any one we have to do. Understand my point? Any one method we have to follow. Follow one method, it will be easy. Debits and credit. Both methods are easy. I am not saying that. Both methods are easy. Is it right? Both methods are easy. Convenience. We will see how it will work. Fine? How it will work. Can we do one question on this?
Yes,
Yeah,
doctor.
doctor, yeah.
Okay? Can you see? Now, what we will do, test your understanding one. Okay? We will not do illustration. Okay? We will do test your understanding one. Fine? We are doing complete question, and it don't say that this much is there. In the examination, they will ask only an extract of the question as such. Is it? As the extract of the question as such. Now, what they have mentioned very clearly that they have given you a balance sheet. Okay, they have given you a balance sheet and they have given you a statement of profit and loss. Okay, they have given a statement of profit and loss. Before we go, okay, before we go, just have a look, okay, how they have started. Is that how they have started? They have done the same thing, cash from operating activities format. Okay, this you have to make sure that how we are doing. This is the step 1. Okay, this is the step 1, this is the step 2, and this is the step 3. Fine? Now, statement of, there will be lot of workings. Okay, there will be a lot of workings. You have workings is only in the T-shape account. Okay, workings will be there only in the T-shape. Statement of cash flow. Is it right? Statement of cash flow for the year ended. Is it right? For the year ended. 1 minute. We are in different mode. 1 minute.
Yeah.
This one. Is it? Statement of cash flow. Which company it is there? Is that? Statement of cash flows of Hollywood for the year ended. September 2023. First, what we have to, if you have can you take the screenshot and can put on the WhatsApp group that the format, it will be easy for you. Okay. Now, the first one is what we have to take, cash flow from operating activities. If you can we are doing in Excel, that's good enough. Okay. First one. What we have to start with first one? See the format. Margin or Hussein?
Yeah. Cash from profit before tax.
Profit before tax. Profit before tax. See the income statement. In the income statement, you have profit before tax. Is it? In the income statement, you will have profit before tax. How much is the profit before tax?
290.
290. Yes, you have to take that and you have to write here. That's all. Okay, nothing is there. 290. Okay, next you have to make adjustments. Yes, tell me, Mazin, what are the things one by one?
Yeah, adjustment for finance cost.
Adjustment for finance cost. Is it right? Finance cost is there.
5,000.
How much is the
19,000.
finance cost? Finance cost is how much? 19. It is there? Finance cost is how much?
19,000.
19. What we have to do, add or less?
Will be less
Check.
because we pay this one, right?
No. Check the format. Cash flow statement. Cash flow statement. Check the format.
Minus.
Check the format. Finance cost. What is there in finance cost? They have added or this. Check the format. I will not go here. I will show you the format. That will be more appropriate for me. Okay, that will be more appropriate for me. See, finance cost. See the things.
Add.
Always, always,
Add.
always added. Nothing is there in brackets. Never.
But why, doctor?
Huh?
Why investment income it will be minus?
We are start. See, good.
Why it's this
Pardon?
investment income? It should be add, right? Because inflow.
This is finance cost, Hussein.
No, I'm asking about investment.
Wait, Sabar. Okay, wait. Give me some time. I will come. I will explain you. Okay, why we are not going to add. We are deduct. Okay, we will subtract it, but we will show it separately. Okay, we will show it separately. Give me time. I am here to explain you the incomplete. Okay. Now, what happens? Finance cost initially. Okay. Finance cost initially should be added. Is it right? How much? What they have mentioned? Finance cost or what they have mentioned? They have mentioned finance cost. Write the finance cost only. There is no problem if you write interest also. Is that finance cost? Finance cost. How much is the finance cost? Finance cost is 19. Initially we have to add. Somewhere we will come here finance cost, okay? Somewhere we will come here finance cost. Next, what is there?
Depreciation.
Depreciation. How much is the depreciation? How much is the depreciation?
Check it.
Point number 5. Point number 5.
87,000.
87. Okay. Point number 5. 87. Okay. Depreciation. I will write 0.5. 87. Is it right? If I'm not writing, you have to remind this is in thousands. Okay, depreciation. Are you clear about this?
Yeah.
Next. Anything else?
Where is it, doctor? I didn't see the depreciation.
Oh, okay.
Just let me see it first.
Point number 5.
Point. Okay. Okay.
Okay.
Adjustment.
Next.
Additional information.
Yes, additional information.
Okay.
Next.
Okay. Okay, impairment.
Okay, next. Anything else
Impairment.
before that?
Mm, no.
Income from investment. Income from investment. Investment income is there.
Yeah.
What we have done, investment income?
Minus.
Always
Yes.
minus. If they say only one point, means always plus or always minus. Understand point? If they have not given option, then it is only one thing, or investment income. How much is the investment income?
Investment income. 5.
5. Is it? Investment income is 5. What we have to do?
Minus.
Minus. Investment income 5. Next, anything else?
Impairment we said, right?
Impairment. Okay. They have done. See one by one. They have taken this on the Hollywood issue. This will come in financing activities. Okay. This will come in. The current asset investment is a 30-day government bond. We will see what is the current assets. Property, plant, equipment is revalued. Okay. And now you see property, plant, equipment disposed in the year 75,000. What is the cash received? We have received, see, property, plant of the year has a carrying amount of how much? To 75,000. Disposed to how much? 98,000. Profit or gain?
20. Profit.
How much?
23.
We have to add or we have to less?
We have to minus it from the
Huh.
75 minus 98.
Okay. No second thought. Is it right? Minus. Is it right? Minus. If I'm not writing minus, profit on sale. Point number which one?
Point number
4.
4. Yeah.
Point number?
So if loss, we will write it impairment, right?
No,
Now
if
it is
loss,
profit.
yes, if it is loss, no, you have to write loss only. Okay, if it is loss, add. If it is profit, less.
Yeah.
Is it right? If it is profit. Sale is how much? Sale is 98,000. Okay, carrying amount is how much? Carrying amount is, I am writing very slowly, okay, 75. Difference is how much?
23.
23. Minus. Is it? Difference is how much? Minus. Fine. Now, we have done, is it right? See the thing. We have done current, property, plant, equipment, fine. We have done this. Is it right? We have done this. Is it right? We have done this. Accruals will take, interest payable. We'll see that. Interim dividends also we will see. Okay? We will see. Okay, fine. Now, see the profit and loss account. Okay? We have done profit before tax. We have done finance cost. We have done income from investments. Okay? We have done. How much we will get the total? 290 plus 19 plus 87 plus 5 minus 5 minus 23.
368.
How much? 368.
36. Yeah.
Okay. This is called as operating profit. What is given in the format? In the format, what they have mentioned? They have mentioned nothing. They have mentioned. Okay. Usually they will not mention anything. Okay. Usually they will not mention anything. Okay. Fine. Okay. Okay. Operating profit before we suppose if even we don't write, nothing will happen. Okay. Okay. Just
Before tax.
no. No. We have to change the working capital, or we have to change the current assets and current liabilities. Okay, we have to take that. Just keep like this. Okay, I will write something. Okay, don't worry. Next, once this is over, okay, once this is over, what are the things we have to take very clearly? Profit before tax, adjustments, finance cost, depreciation should be added, investment income should be deducted, any profit on sale should be less, or loss. If you get loss, you have to add. If you get profit, you have to deduct. Okay. Now after that, what we have to do, we have to take, I am not writing this, we have to take current assets and current liabilities. Is that we have to take current assets and current liabilities. Now when you are taking, you can write here only, examination, don't worry about that. This is 2002 2003 inventory. Inventory is increasing. How much it is increasing? What is the difference? Increasing or decreasing?
Decreasing 40.
Decreasing how much? Decreasing 40. If inventory decreases, what will happen to cash?
Cash increase.
Asset decreases, cash
Increase.
is it? Asset decreases, cash increases. Is that?
Yeah.
Decrease in inventory. Is it? Decrease in inventory. How much decrease in inventory? 40.
40.
Okay, now you understand the importance of rule 1, 2, 3, 4. Okay, receivables. What happens to receivables? What happening to
Increase.
receivables? Increasing. How much is increasing?
Yeah. It's 90 and 70.
70. Asset increases, cash will
Decrease.
is it? Asset increases, cash will increase in receivables. How much? 70. Asset increases, cash will decrease. Okay. Next.
Decrease.
Next, interest receivables we will take after that. We are not concerned about interest receivable. Is that investments also we will take. Investment in investment activities. Okay. Cash in bank, cash in hand will never take. We will take in the end. Okay. We will take in the end. Fine. Anything is there now. Okay. We have completed inventory. We have completed trade receivables. Okay. Next, go to the current liabilities. Go to the current liabilities, trade payables. Okay, trade payables.
Yeah.
Trade payables. What happening? It is increasing. How much it is increasing? Increasing by how much?
150.
Liability increases, cash will
Decrease.
liability increases, cash will
Increase.
increase. Is it right? Liability increases, cash will increase. Is it? Increase in payables.
Yeah.
How much? 150. Okay? Is it clear?
Yeah.
Next. What happened? You have another thing. You have what? You have accrual. We'll take income tax separately, okay? Accruals. Accruals is how much, increasing or decreasing?
Increase by 3.
3. What happens to cash?
Increase.
1 minute. 1 minute.
Accrual is asset, right?
Accrual is what? Outstanding.
Outstanding.
See, they have given something in accrual here. Point number 6. Is it? They have given something in accrual here. Is it right? Point number 6. I will put point number 6. Accruals. How much is the accruals? There is there. Opening, the accruals balance include interest payable 33 at the last year and 6,000 on 30th September. Okay, 30th September. How much is the accruals? Accruals include interest payable. Okay, accruals include interest payable. How much is the opening balance accruals?
33.
Where? Closing balance?
36.
36. What they are saying, 1 minute. What they are saying, 33 and 36. Okay, 33 and 36. The accrual balance include interest payable 33. Of 30 at 30, how much? See the things. Just I am putting here. Okay, I am putting here. You can put a small T account. Okay, make it a practice. Accrual. How much is the opening balance? It is a liability. Is it right? It is a liability. 33. It includes 33. Opening balance is almost 33. Okay, 33. But they say that how much is the closing balance they are having? They are having a closing. It includes how much? It includes 6,000. It includes 6,000. See, 33 is the opening balance. Okay, it is a accrual liability. Accrual liability. Liability opening balance will be on the credit side. Is it right? Closing balance will be on the credit side. How much is there? 36. Okay, 36. They say that there is, how much is the balance is there? Accrual
6.
balance includes interest payable. Is that includes interest payable? Mean 33 out of 33 is the interest amount. Is it right? Again we will do interest separately. 33 minus 33. 33 minus 33 is the interest. Okay, means you have the accrual. In accrual, 33 is the opening balance, 33 is the interest. Is that? The balance will be how much? 0. Now closing balance is how much? Closing balance is 6 of the 36. Interest is how much? Interest is 6. Is it right? Interest is 6. Means we are removing interest. We will show separately interest. We will show separately interest. 36 minus 6. Here also we have removed interest. Here also we have removed interest. We are taking only accruals. Okay? We are taking only accruals. Accruals is how much? Difference is how much? The accrual difference is how much? 30. Okay? The accrual difference is how much? 30. Now, immediately I will put interest also for you so that you will not have any doubt on that. Okay? Immediately I will put the interest. Interest, how much is the interest? We have removed interest 33. Interest opening balance will be how much? 33. Okay, interest opening balance will be how much? 33. Closing balance will be how much? 6. Is it? Closing balance is how much? 6. This 33 we are taking here. This 6 we are taking here. Okay, we are separating two things. Accruals and interest. Is that? Accruals and interest. Now, how much is the difference you are having here in the first case of accruals? In the first case of accruals, how much you are having difference?
30.
30. Anything difference on the expenses, it is nothing but this has been paid. Debit all expenses and losses. Understand what? Debit all expenses and losses. Is that anything difference on the, see, we are doing for the first time. Give me time. Inshallah, it will be easy for us to make it a understanding. Okay? We will not change the rules. Okay? We will never change the rules. How much is the difference? Is it? How much is the now? It has been, see what happens, expenses, liability increases, is it? Liability is increasing. How much is the liability increasing? You are not getting, is it right?
Yeah, doctor, again?
1 minute, 1 minute.
Yeah.
1 minute.
Confused little bit.
Okay, I got it. I am here.
Yeah.
I'm here. Fine.
Yeah.
I'm here. You have an accrual account. Okay? You have an accrual account. In accrual account, T account. Okay? Debit and credit.
Okay.
How much they have said opening balance? They said opening balance is 33. Liability. Liability opening balance on the credit side always. They say that in this liability there is a interest. Is it? There is a interest is there. How much interest is there? 33,000. Is it? 33,000. If you take that one, what is the opening balance of the liability? Accrual
0.
0. Now, you take interest also. Interest payable. Okay? Interest payable. Interest payable, there is a opening balance. Okay? We have deducted this. In the interest payable, the same balance will be there. Opening balance. How much? 33.
3.
Okay? Fine. Now, closing balance. Okay? Closing. How much is the closing balance? 36.
36. Yeah.
In that, interest is how much?
6.
6. Then the closing balance will become how much?
30.
30. The same interest. Is it right? The same interest. Is it right? The same interest. Is it right? We have to take the interest I'm putting this. You have to take this interest and you have to show here. How much is there in the interest payable is how much? The closing balance is how much? The closing balance is 6. Is it okay to you?
Yeah.
Now, do the total. Okay, do the total. Total is how much? 30. Total is how much? 30. Difference is on which side? Difference is on the credit side. How much is the difference? 30. How much is the difference? 30. Means your liability has been
Increased
increased.
30.
Yeah, your liability has been increased. If liability increases, what will happen to cash?
Cash will decrease.
Li-
Increase.
Rule 1, 2, 3, 4. If liability increases, cash will
In- Increase.
increase. Write down on separate paper. If you have yellow sheets are there, is it? If you have
Yeah.
yellow sheets are there, write on the yellow sheets the rules. Okay? Rules. What will happen? See the thing. I will put this as a note 1. I will put this as a note 2. Okay, note 1. What happens? Is it right? Accruals. Is it right? Is it right? Increase in accruals. Note 1. Is it right? Increase in accruals. How much increase in accruals? 30.
30.
Fine. Okay. We have taken the trade payables, we have taken the accruals. Okay. Fine. Now, this is what. Next, you have to show everything separately. Okay. We have to show everything separately. Now, what happens? Put the things here. Total. How much you will get total? 368. 368 plus 40
What?
minus 70 plus 150 plus 30.
518.
518. Is it? This is called
Yeah.
as cash generated from operations. Only operations. Okay, only operations. We are doing nothing more, nothing less. Okay, only operation. Fine. Next, once we have done this, then now you have to think about what? Interest paid. Is that interest paid? Slowly, don't rush. Okay, first problem, it will take time. Okay, interest paid. How much is the interest we have? Say finance cost is how much? Finance cost is how much? 19. Yes?
Mm.
Is it right? Finance cost is how much? 19. Hussein asked me
Yeah.
why we are deducting finance cost here. In the beginning, we will deduct we will add finance cost. Is it right? In the beginning, we add finance cost. This is nothing but finance cost. Is it? This is nothing but finance cost. In the finance cost, how much is there? How much is there? We have taken. Is it right? Finance cost. Where is the finance cost? Fine. Is it right? Where is the finance cost? Fine. How much? How much is the finance cost in note 2? Opening balance is 33, closing balance is 6. Is it right? Is it okay? Note number 2.
Yeah.
Okay,
Yeah.
note number 2. Okay. Now, in the profit and loss account, how much is the finance cost they have given?
The profit and loss.
How much we have added amount?
19.
19. How much we have added? Liability. Is it right? How much we have added? We have to take the liability. That is what we have adding. How much we have added? We have added 19. Okay, we have added 19. This is the structured procedure you will have. Take my word. Structured procedure you will have. Opening balance, closing balance, profit and loss account. Then, okay, then you will have the total. How much is the total? Total will be how much? Which side it is more? Debit or credit?
Debit. Credit side more.
Credit side.
Yeah.
2,
Yeah.
2, 1, 42. 42. Difference is how much? 42 minus 6, 36.
38, 36.
36. Anything on the debit side, what happens? It has been paid. If if credit side, liability increases. If it is on the debit side, if it is on the credit side, liability increases. If it is on the debit side, liability is decreasing. Liability decreases, what happens to cash?
Liability decrease. Cash will decrease.
Cash will decrease.
Decrease. Yeah.
Is it right? Cash will decrease. Interest paid. Is it right? Interest paid. Note 2. How much you have paid interest? One minute. One minute. Total we have done wrong, my dear. 3, 1. It is 52.
33 is I got 9. Yeah, 52. Minus
52.
6. 46.
46. How much interest paid? Interest paid is 46.
56.
Understand, Hussein, what we are doing now? Yes, Hussein.
Sumaya.
Sumaya. Where are you, Hussein?
I'm here, I'm writing only.
Okay, are you clear about this, Sumaya and Hussein?
Yes, doctor.
There is some confusion.
Tell me.
Yes, there is some confusion.
Where, tell me.
I need to reverse it and I will back to you.
Okay.
tomorrow.
Fine. Okay. Okay. Next time I will be more specific on this. Okay. Next time I will. Now, we have done what? We have done interest. Okay. Finance cost. What is left over here? Only the income tax. Is it right? Income tax is how much? How much is the income tax in profit and loss account? 104.
104.
Okay. In the balance sheet also they are given income tax. Is that in the balance sheet also they are given income tax? How much is the income tax they gave in balance sheet? Opening balance is 90, closing balance is 100. Okay, opening balance is 90, closing balance is 100. I am writing here only. Okay, note 3. Note 3. See, you can write in short. Okay, nobody will income tax. Okay, opening balance. Opening balance is 90, closing balance is 100. Okay, opening balance is 90, closing balance is liability, opening balance, credit side. Always credit, closing balance. In the profit and loss account, how much they have said? Income tax. Income tax expense. 104.
4.
Is it 104? That is payable, okay? 104. See Hussein, liability, opening balance, credit, closing balance on the debit side. Profit and loss account is nothing but the provision. Okay, they have not paid, it is only provision. Liability increases 104. That's all. Okay, total it. How much you will get? 194. How much you will get?
194.
194. Difference is how much? Difference is 94.
494.
If it is debit, liability if it is debit, it means liability is decreasing. Is it right? Liability is decreasing. How it will decrease? You have paid.
Yeah.
Is it right? You have paid. Debit all expenses on losses. You can work on any rule. You can work on any principle. Result will be same. Okay? Result will be same. How much we have paid income tax? 94. Is it right? Income tax, how much you have paid? 90. Write down. Income tax paid. Note 3. How much? 94. It's simple. It's when I say it's easy. Understand point? When I say when there is a difficulty, I will tell you in advance. I will tell you here you have to be very careful. That's all. Nothing is there. We have taken the things. We have not taken investment. We'll take investment at a later stage. Okay? We'll take investments at a later stage. Are you clear about this?
Yeah. Income
No.
tax paid.
Total it. How much you'll get?
Minus
518 minus
378.
46 minus 94. How much?
378.
This is called as cash flow from operating activities. Net cash flow. Okay, are you clear about this?
Yes.
Now see the things. Very simple. Is it right? We have to do this. We have to write a 2 or 3 sentences. 2 or 3 sentences. Cash generated from operations is positive. Okay? It is a good sign. Is it right? It is a good sign that you have getting a cash generated from operating activities is 518. Cash flow from operating activities is 378. Means the business is doing exceptionally well. They are generating revenue for the company. Is it right? From the operating activities, they are generating revenue to the company. Are you clear about this? Fine. Now,
Yeah.
can I continue or I should stop?
So big part remaining?
Huh? It is not. See,
Big part?
it is not that much, but explanation needs. We will do investing. Tomorrow we will do financing. Okay?
All right.
Is it okay? Yes or no?
But it's take time, right?
Same.
Huh?
It's take time.
5 minutes maximum.
Okay, go ahead.
Okay? 5 minutes maximum. Okay? 5 minutes. You can put it. It is 5 minutes, not more than that. Okay? Now, you take what we have to take what once we have done, we have to take property, plant and equipment. Okay? We have property, plant. This is the non-current activity. Okay. How much is the opening balance?
Opening balance.
Property,
510?
plant and equipment.
Yeah.
How much?
510.
Opening
510.
balance is 510. Okay. Opening balance is 510. I am writing here. Okay. I am writing here. Note. I will write here. Note 4. Okay. Note 4. See, it is an asset. Okay. It is an asset. Fine. Now, property, plant and equipment. Make the same rule. Debit and credit. Opening balance. Asset. Opening balance. Debit or credit?
Asset opening.
Asset. Tell me.
Debit.
Always debit. Asset opening balance always debit. Liability opening balance always credit. Okay. Always debit. Opening balance. Opening balance is 510. Immediately closing balance will be how much? Closing balance is 634. Are you clear about this? Okay.
Yes.
Opening balance, always opening balance will be debit side, closing balance will be credit side. Asset, any asset. Fine, any asset. Now, you go one by one. Note, okay. Now, in the note, what they have said? They have said that they have sold it. Point number 4. How much they have sold it? 75,000. What is the amount they have received?
23.
No.
98.
98. Is it? They have but they have sold it how much? They have sold it for how much? They have sold it for 75. If they have sold it for 75, asset decreases or increases?
Increase.
You are selling the asset.
Decrease.
Decreases.
75. Yeah.
Is it
From
right?
98 to
See,
75.
asset decreases, credit side.
Cash increase.
Asset increases, it will be debit side. You have sold asset, disposal. Is it a disposal? How much you have sold it? You have sold it. What is the carrying amount? We take only carrying amount. How much is the carrying amount?
75.
75. Okay, next. Depreciation is how much? Point number 6. We take
87.
87. Okay, depreciation is how much? Point number 5. 87. Is it? By depreciation also what will happen? The value of the asset will decrease. 70. How much? Depreciation 87.
87.
Next. Okay, next. See the things. Anything we have to take?
Revaluation.
Revaluation. Point number 3.
3.
Is it? Point number 3, revaluation. Where there is given revaluation? In OCI.
OCI, other compensation.
Now understanding? It is almost revision what we are doing. Is it? It is almost OCI. Gain on property revaluation is how much?
In 50.
50. Okay. Gain on property revaluation is how much? If revaluation value increases, debit side or credit side?
Valuing.
Asset increases.
Debit.
Debit. Rule is rule, okay? Rule is nothing is there. Revaluation. How much? 50. Is that revaluation is 50. Now, you check whether we have covered all the points on assets. We have taken point number 3, we have taken point number 4, you have taken point number 5. Okay, nothing is there. Is it? Nothing is there. Now, see the asset account. Which side is more?
Credit account more.
How much?
75 plus 87, 643, 805.
796. Check.
$75 minus 87, 643.
75 plus 87
Plus 87.
plus 634.
6 there. Okay, 634. I wrote 643.
No, good. Alhamdulillah.
Okay. Yeah. Okay.
How much?
796.
What is the difference?
Uh, 236.
What is this?
Mhm.
If debit is there, asset increasing or decreasing?
Asset decreasing.
Increasing, na dear. Debit side. I am giving formula here also. Rule here only I am writing. I am not writing rule anywhere.
Yeah.
Asset increases what? It is how much it is increasing difference. When it will increase asset? When you have purchased.
Purchase, yeah.
When you have purchased. Fine. When you have purchased. How much is there? Property, plant and equipment. Note 4. Increase. Okay, write down. Increase. Is that increase? How much? If asset increases, what will happen? Cash will
Decrease.
decrease. 1 minute. Okay? Now, how much you have sold asset? We have sold asset. How much we have sold it?
Mm.
Point number 4.
1, no?
Point number 4. How much we have sold? Cash received. How much?
75.
98.
Okay. Oh, yeah, 98. Yeah,
98.
that-
Any doubt, ask me. Or don't go by my word. Okay? Is it? Cash on sale of asset. Is it right? Cash on sale of asset. How much? 98. Inflow. Is it right? Cash on sale of asset. How much? 98. Is it okay?
98.
Is it okay?
Yeah.
Next. See, we have in the beginning, we have what we have done. In the beginning, what is there? Yes, interest. See the things. Interest receivable. It is. This is where this will come from investments. Is it right? Interest receivables. This will come from where? This will come from investments. Okay? This will
Investment.
come from invest. Opening balance is how much? 9. Is that
Yeah.
opening balance is not 9. Receivables, okay? Opening balance, it is related to investment. It is not a current asset. It is related to investment. How much is the opening balance? 9. Closing balance
9.
is how much? 4.
4.
Is that closing balance is how much? 4. In the
4.
income statement, we have seen the things. What we have done in the beginning, if you remember, in the investment income, what we have done? We have deducted 5.
Yeah.
Is it right? Why we have deducted 5 is, it is not in operations, it is related to investment. It is not in operation. Where we have, it is related to investment. See, investment. How much is there? I am writing here only, okay? I am writing here only note 5. Is it right? Note 5. Interest receivables. Is it right? It is an asset. Debit balance will be on which side? Opening balance will be on which side? Asset.
Asset,
Opening balance?
Debit side.
Debit side. How much is that? 9. Straight away, closing balance. You can write like this in examination, nothing will happen. Is it right? Closing balance is how much? 4. Is it right? Closing balance. How much is the income receivables? How much you have received income in the balance sheet, in the income statement?
5.
Income
5.
statement. How much is there? 5. Okay. Income statement. Asset increasing. Is it right? If cash is coming, asset will increase. Is it right? Received interest. Is it right? This is the income. What will have? What is the debit and what is the general entry? General entry is receivables. Interest receivables will be debit and cash will be credit. Okay. Now it is the profit and loss account. How much is there? 5.
5.
Okay. Total how much? That's all. Total will be how much? 14. Total will be how much? 14. Difference will be how much? Difference is 10. Is it right?
Yeah.
Difference is 10. If it difference is on the credit side, it is received. Is it right? Difference is on the credit side, it is received. Means in the beginning we will deduct the income, but in investing activities, is it right? In investing activities, we will add interest on investments. Interest receivables. Note 5. How much?
Yes.
How much? 10.
Interest in investment.
Interest from investments, is it right? Interest
Yeah.
on what? Interest on investments.
Okay.
Interest on investments. I can write interest from investments or anything. Is it right? How much is there?
Okay.
10. Total comes to how much?
Okay. 2, 3, 9, 10. Not 5. Minus 6, 5, 9, 12. 250, no?
Check. Minus 236. Minus 236. minus
98,
236 plus
128,
98 plus 10.
506.
Ah,
Minus
minus
236, 98,
minus 128.
28. Minus 128.
Cash outflow from investing activities. Is it okay?